Hello everyone, let's get straight to the point and talk about why traders lose. We're going to cover the 5 fatal flaws of trading, and at the end of the video we're going to reveal the 6th fatal flaw, the one we believe to be the biggest culprit in contributing to many traders' losses, and yet it's most often overlooked. If you've been trading for a long time, you have no doubt felt a sort of invisible hand that reaches into your trading account and takes away all your money. We all have. And it doesn't really matter how many new and wonderfully effective strategies you learn, how many seminars and retreats you attend, or even how many hours you spend watching fabulous videos trying to master the art of trading. Because nothing seems to stop that invisible hand from emptying your trading account. So whether you're just starting out or you're already a professional trader, you really need to stop that invisible hand from depleting your account. And in order to do so, you need to recognize the 5 fingers of that hand and cut them off. We're going to call them the 5 lacks. So, introducing fatal flaw number 1, the lack of methodology. So firstly, if you really want to trade for a living, you need a defined trading methodology, or better yet, a concrete trading plan that clearly defines what constitutes a buy or sell signal, when and where to place protective and trailing stops, and how to exit positions effectively. Without this roadmap, you're basically navigating a complex market blindfolded. But this lack can easily be resolved. In fact, we have a series of videos on our channel that addresses trading strategies that have survived the test of time. Each video is accompanied by a live stream recording with further clarifications on the strategy presented. So if you haven't watched it yet, I strongly suggest that you do, right after you finish watching this video. So moving on to fatal flaw number 2, the lack of discipline. So after watching all of those videos, you can pick one of the strategies you see there. The best way to do that is via the profit factor. We also have a nice video explaining that in details, but let's just say you already went through all of that and you've clearly defined your trading methodology in the simplest terms possible. For instance, you may say, I only buy when the lagging line crosses above the span B line and the 200 SMA is below. Sounds like a good approach? Yeah, simple enough and it's extremely effective, but you're not done yet. Because now you have to have the discipline to follow that. Even the best trading strategy is utterly useless without the discipline to follow it. So write this down. It's imperative to not only define a trading methodology that aligns with your personality, but also to adhere to it religiously. As my father always says, discipline is the bridge between goals and accomplishment. And talking about goals, here comes fatal flaw number 3, the lack of realistic goals and expectations. Now here it's not so much the lack of goals, but the lack of realistic goals. Dreaming of overnight riches typically leads to impulsive and risky trading behaviors and actually prevents you from exercising the necessary discipline that you need to follow through with your methodology. So pay really close attention to this one, because it can be disguised as healthy aspiration when really it just messes up your discipline. If you want to trade for a living, or even if you just want to have an extra income from trading, start with attainable goals. Now, what do I mean by that? Let me give you an example. Let's say you're just starting to trade, You don't want to set unrealistic goals such as a return of 100% in your first year. or worst yet, in your first month. Now, I know it sounds like I'm exaggerating, but it's extremely common for us in the Institute to see traders who tell us, I have $2,500 trading account and my goal is to make $5,000 a month. I can be very disciplined and live with $2,500 per month. That sounds like a very modest goal in terms of ambition, yeah? But it expects a 100% return in 1 month. Now, I understand you might be disappointed in hearing me say that's not realistic, particularly when there are so many channels out there telling you exactly the opposite. But that's just reality. Many of our Technical Analysis Institute participants inquire about realistic, attainable goals in trading. And I get it, it's a tough question because honestly, it really varies a lot. But you know, if you're starting out and you manage to finish the year breaking even, then congratulations, because that's actually a pretty solid place to be. It means you've got a decent handle on the basics and you're setting yourself up really nicely for future success in trading. Now, maybe the second year, a good goal can be to achieve a 10% return on your investment. And that's absolutely realistic. And by all means, don't set goals like winning 100% of your trades, because that will never happen. The real secret isn't in the number of trades that you win, but without wanting to sound like a cliche, the secret lies in letting your winners run and cutting your losers short. Do let me know in the comments below if you'd like us to make a video on the topic of trading goals, and then we'll be able to dissect common goals such as making $1,000 a day. Now, moving on to the next fatal flaw, the lack of patience. Now, we've lost count of how many talented students with great potential to become great traders would tell us, I want to make money trading, but I don't have the patience to learn technical analysis. I need to make money now. And here's one of the greatest secrets of trading. Without a solid foundation on technical analysis, trading success is close to impossible. Another common reflection on patience is when traders tell us, I want to earn my living trading, but I don't have the patience to be waiting for the ideal setup. So here's another major secret. Markets rarely trend, maybe 20% of the time. The rest of the time, they don't move in a clear direction. So a trader who doesn't know how to wait is bound to lose. And that's regardless of his style of trading. Even a scalper will need huge doses of patience. Fatal flaw number 5, lack of money management. Money management encompasses risk-reward ratio analysis, probability of success and failure, protective stops, trading size, etc. The 1% of successful traders risk 1 or 2% of their portfolio on any given position. However, amateur traders often risk 25% of their portfolio. So it's really no wonder why they lose their trading accounts so often. If you're not generating the income that you want in your trading right now, one or more of these 5 lacks is hurting you. Let me know in the comments below which one of these lacks are you currently struggling with. Trading can be extremely rewarding, but it is so easy to fall victim to some or all of these points. If that's your case and you'd like us to help you overcome any of these fatal flaws, you need to join our Technical Analysis Mastery Program. Here, we dive into all of these issues and offer effective solutions. You'll find the link in the description below. Now, let's chat about something that many don't consider until it's too late, and that's the lack of proper capitalization. You see, diving into trading without enough capital is like starting a long journey with a nearly empty gas tank. Sure, you might be eager, you might have the skills, but without sufficient funds, you're setting yourself up for a really tough ride. Proper capital isn't just about affording trades, it's about having the resilience to stick through the market's ups and downs. Think of it as your financial cushion that keeps you in the game, allowing you to make moves and learn without the constant fear of going broke. Remember, in trading, it's not just about making money, it's also about having enough of it to give your strategies the time and the space they need in order to work. Let me give you an example. During the crash of 2008, Warren Buffett lost about $25 billion in 1 year, cutting his fortune from $62 billion to $37 billion. But he didn't panic and sell. He knew such events are to be expected. In fact, he continued to invest as the sharp decline offered new opportunities. So when the market recovered, his fortune did as well. And that's the importance of proper capitalization. If you like this video, you are going to love this one.